Hey, good morning. Let's go over today's trade plan. So in the overnight session, ES failed at 2112, and we ended up balancing and then getting a deeper pullback into the 97.75 to 99.75 support area. At this point, heading into the open, we're going to be using the 02 half to 04 half as the micro bull bear zone. So from 97.75 to 99.75, if we can't move back above 02 half to 04 half, then that would definitely be a red flag for buyers, and at that point it would signal weakness and it could lead to a breakdown into the 93 half to 95 half and potentially even lower. Now buyers can still defend the support zones on the way down, but our bias is not going to be as bullish as it was yesterday if ES fails at 97.75 to 99.75 and can't get back above 02 half to 04 half. So, the more times you test any given support area, the more likely it is to break and the weaker that support gets. So, yesterday we had support at 86 quarter to 88 quarter, and that ended up being a launching point and a reversal point for a move all the way back up to 2112. At this point, we don't really want to see the market retesting that zone. So the idea is that if the market is still bullish, then we should not really put in a deeper pullback, that we should actually reverse off of the 97.75 to 99.75 zone and then actually be able to make it back above 02 half to 04 half, because the overall structure would still then be intact, and the buyers would still have a shot at maintaining control. Above the micro bull bear zone, we have the previous VPOC at 0775, which can act as short-term resistance on the way back up and is a smaller inflection point. We have the initial resistance zone at 10 quarter to 12 quarter, and that is still a zone that has potential to get tested on the day time frame. Now looking at the econ calendar, the next major economic announcement is the FOMC announcement at 1 p.m. Central Time, and usually ahead of FOMC the market will simply balance within a range, and that's another reason that the downside may be limited off the open here, just because the market does have that tendency to just remain range bound ahead of FOMC. Now, even though that's a tendency, it doesn't mean that it happens every single time. So after the open, we still have to look for signs that support that idea. So if off the open we're seeing some major downside momentum and weakening internals that indicate a weak broader market, in that case, we could go lower, right? And it doesn't mean that the market has to just simply balance in a range, but that is typically what happens. So as long as we're not seeing any strong signs pointing to a directional move one way or the other, the expectation is going to be for the market to remain range bound and to balance in a range. That's going to be the default expectation. But at the same time, if we see things in real time that clearly contradict that idea, then we do have to take those signals into account as well. So off the open, 97.75, 99.75 is the initial support. Again, ideally, if the market is bullish, then we should not break initial support. And if we do, then buyers can still be active at 93 half to 95 half, but at that point we do have to be cautious on long setups. And that's a move below initial support certainly wouldn't be something that would inspire confidence on the buy side. So at that point we would have to be more neutral in our bias, and if we can't get back above 02 half, 04 half, then again we'll have to be more cautious on the long side. But if we can get back above, then we'll simply be stuck in a balance, and on the upside we can still get a move up to 0775, 10 quarter, 12 quarter. That's an area where sellers can still be active on first test. Beyond that, in the event that we are able to go through the initial resistance zone ahead of FOMC, the 16 to 18 half zone can certainly cap the upside ahead of FOMC. Now, after the FOMC announcement, things can be volatile. We can get some directional movement or even some, wide range whipsaw type movement, and that's not something that you can really predict ahead of time. You just have to be aware of the market context to understand which side's in control, and then be very careful immediately after the announcement. Typically give it about 15 or 20 minutes for the market to stabilize, and then see if ES is trading at a level that provides some short-term edge. And if not, then simply sit out and wait, and be patient until the market actually tests an area where you can get some short-term edge. And if it's just kind of whipsawing and not really showing any directional conviction, then it's probably better just to stay out and let the market stabilize a bit. So those are really the main ideas heading into the open. Bigger picture, we are still stuck in a wide range balance, and we're getting two-sided movement within that balance. But I think how ES reacts to the initial support, to micro bull bear, and 93 half, 95 half, I think that will set the tone for the next several days. So if the buyers are going to maintain control, then ideally we hold those zones today, because we know that bigger picture, the trend has been to the upside, and now we're simply balancing near the all-time high and these upper prices. But if we fail to hold 97.75, 99.75, then that would put even that bigger picture structure into question. And if we start heading back down, then we're not going to get the same magnitude of reaction at the support zones anymore. And that's why we'll have to be more careful on the long side if we break below initial support. So those are the main thoughts heading into the open. Let's see if the buy side can step in and maintain control today, and we'll take it from there.